buying something that's cheap does not give you a right to a return. Buying something that's inexpensive relative to its peers, relative to its benchmark, and a company that people have underestimated its ability to deliver earnings is more valuable. And so buy low, sell high is oversimplification. It's more like buy a high quality asset that people don't understand at a cheap price.
I got you.
And when they appreciate it, the money will come and it'll be hot. And you'll be selling it to the last investor.
I got you.
Welcome to another episode of the Brothers Who Talk with Terry and AD. This podcast is about men talking about everyday shenanigans, the stuff that makes us mad, to the topics that concern why in the world do these guys have a podcast. Let's get to it.
Oh, AD, you in that intro. We got
I'm gonna resend that today. Get you the better one.
We got.
I feel like it's been a minute since we were live.
It's been a while. It's been a couple of weeks at least. It seems like forever though.
Forever.
All right, so we got a great show today. We're gonna get it cracking real quick. So we're gonna start this show out the same way we do every single show. AD, how was your week, brother?
My week has been good. What's today? Today's only Thursday. Yes, it's been good. Had a few bumps in the beginning of the week, but they smoothed out and it's getting more better. Some blessings hit my bank account, so I'm happy about that. So it's
that cash
app. My brother. So we got
we in this fight together. I don't know what you're talking about, brother.
we got so I'm excited. Good things, the kids deciding to go back to school, and I want to shout out to my dog Brooklyn, who was quiet most of the morning, and I was decided wanted some noise. The thing is, this week was good. The kids going back to school. We're gonna be schooling from home. They gave you the option. And I think a lot of people in the district got the option. I'm not sure who's going back into the school. I know some people are in a situation where they probably have to do so. So, yeah, but that's my week. Hey, baby cakes.
Yeah.
In the building. And we got, this is the second week. We got married last week. I mentioned that in the other podcast, but I'm going to mention it again.
Might as well.
Might as well. But yeah, that was my week. What about you, Terry?
My week has been good. They give us the same with us out here in Idaho. We're out here. We're in phase 4. Okay. So in the city that I'm in, they give us the governor, Governor Little, no relation, has given the different districts their own way that they can do it virtual.
Okay.
Or I think they're limiting in school. I'm gonna tell you something. My kid's getting up out of here, bro.
You gonna send them in? You gonna send them out there?
Yeah, they gotta roll out like Transformers. Yeah. I can't. I love them.
Right.
I love them. I do. But yeah, they're gonna have to roll out for real. Okay. All right. So they gotta go, brother. They gotta go. I mean, I love them. Don't get me wrong.
Right.
I mean, I want them, but I feel like they're missing, and the reason why they are misbehaving and having issues that they've been home for so long. Yeah, I mean, they've been out so long. But AJ and Lexi though, they are a different breed of children. They are good kids. No, hey TT.
I mean, they're cool. They're not like loud and rambunctious. But they've been a little sneaky leaky. Because I get up in the morning, I'm like, why is there sugar on my counter? I know I made tea last night, but I know I cleaned it up. So my wonderful children, they do stuff, but they don't clean up. Like they don't clean the mess. They don't, like clean up the evidence. Because if back in the day when I did something, you make that pen like right there.
Yeah.
Nobody ever knew I touched it.
Put it right back the way it's supposed to be.
Right, everything in place. My parents suspected because everything looked so perfect. Like everything is like.
Nah, mine don't do that. They gonna tear it up.
Right.
And they gonna leave it there. And then when you ask them about it, they're like, I don't know who did that. It's just two of y'all. It's only two of y'all.
So who like? So nobody knows. Nobody knows how to. That
nobody has a clue how to get that.
I'd rather say yes, Daddy. I took the sugar and dumped it in the trash. Like I wouldn't even be as mad, right? Or E.
E.
That just. What do you? Nobody. So nobody knows what happened. Nobody was here. It just happened on its own. Nana did it, right? Because I got my mother-in-law now. Nana did it. Nana did this. That's what you're trying to say. Yeah. Because she's the only other one. So out of your mouth saying Nana did it. Because I'm gonna go get her.
Let me tell you something. You mentioned my sugar smacks. We got problems. Don't let them leave my cereal alone. You can do whatever else you want to do.
Man,
leave my sugar smacks alone. I mean that. That's why I'm serious, friend. So what we're gonna do right now? We're gonna go ahead and bring our guest to the house. Half hour home today. So if you are interested in investing, dealing with money, anything like that, you want to stay tuned because the guy that we have on today is an investment strategist. He's going to tell you exactly how to do that, especially during the pandemic and how it is now. It's crazy. He's also going to join us for Telling Why You're Mad. So stay right there and check us out. I'm going to bring on Mr. Derik DW. I'm sorry, not DW. I want to call him that, but Derik D. Coffey in the building. So we're going to bring him on.
Hello, everyone.
What's going on, man? How you doing?
I'm good. I'm doing well.
Good. See, you can tell he's an investment strategist because the way he's sitting in that seat. He had that real proper seat. He's like,
that's what I do all day, right?
I'm ready for any question you give me. I'm ready.
You got a bag right in this right spot. Like, I'm good. I'm in a resting kind of position. Like,
I'm so cool. So today, right now, we're going to get into telling why you're mad. So if this is your first time watching or listening to this show, we discuss every single week what has pissed us off all week long. Now, AD.
Yes. I'm tell you what I'm
mad this week.
Tell you what I'm mad. All right. So this is another one my brother Kevin has sent me, and I was just looking at it because I had one, but then I was like, no, this one is better. The kids sleeping longer than me. The kids still in bed while dad's up doing the work.
The devil's a lie.
Yeah, exactly. Sam used to get on me because I used to when it was when they first took the kids home during the pandemic. Now my kids, the way the school's set up, they don't necessarily have to be like check-in and class and stuff like that. But for me, I was like, no sir, you gonna get up like it's class, like we going to school. You get up by 8 o'clock. You need to be at that computer. But dad, I don't care. You got assignments. Start at 8. Because we ain't sleeping late. Because you get out of that habit. Like, you need to get up like we're going back to school. Because in my mind, I'm thinking school's going to open soon. And now I got to get you back into the habit of waking up on time and not being up late. So they used to get on me, but I'm like, nope, I'm up, you up. And they don't even get up as early as I get up. I told them one time, I said, I'm going to get y'all up when I get up. And sometimes I get up at 5 and 6 o'clock in the morning to get stuff started. So, it's I can't do it. Sometimes, and you hear my son, he snores something. I'm like, oh, he all snoring, all sweet and peaceful. I need to wake him up. I need to wake him up. I can't do it.
So,
right.
Lexi, AJ, if you guys hear the sound of your uncle's voice, y'all better get up. I'm just saying, you ain't playing no games with y'all. Mr. Derik.
Yes.
Sir, what has upset you this week? What's got you mad this week?
The thing that bothers me, and it's probably consistent with everybody else that watches news, is the resistance to expert opinion, especially when you're dealing with dumb people. So I have been walking around the neighborhood. I live in Chicago, and I was with my wife one day walking through the park, and there were these young guys. I'm telling you, these guys probably in their mid to early 20s, and they were telling me, that Corona ain't real. It ain't real. They're telling you they're lying to you. They're just making it up. And I have asked myself, what is wrong with expert opinion?
Right.
And this is indicative of a larger issue across the country.
Right.
Where people don't listen to expert opinion.
Right. Folks, the research. Like, no, I don't have this doctorate. They just gave it to me. I
just don't get it. I look at these guys and I was like, man, this is real. People really are this crazy. This stupid.
Right. That's
stupid. Expert opinion is real.
Right.
Real out here. I don't know why And it's crazy. To Derek's point, I mean, they'll talk, they done completely shut down Dr. Fauci.
Right.
When at one point he was the leading expert, he was doing it at the White House making press conferences. Now the White House is like, yeah, bro, no, you ain't talking nothing about it here.
Right.
Take your soapbox out the door someplace.
And listen, Tatiana, I get it. I know, historically, we trusted the system and it's failed us. But to me, the simple stuff, just put a mask on. It's not that hard. Just simple things. If someone said, hey, there's something out there that might hurt you. If you put this simple thing on your face, it could protect you. Risk myself or just put this mask that's just a little bit uncomfortable on my face. I'm going to put the mask on my face. Simply not asking us to do a whole lot. Being in the house, closing certain things down, that's kind of rough. But just, hey, when you go out, just put a mask on your face. Because honestly, if you ever listen to how they talk, it's like they don't really totally know. But they say, I know one thing. It's transmitted in the air. Put something on your face just to kind of cover it. Just a little bit, So I'm with you. Like I said, I know historically, experts, so-called experts, sometimes have led us astray. But in this situations, it means it's little stuff they're asking. Just don't be in my face talking. Give me 6 feet.
Give me 6 feet. You know what I'm saying?
If I smell your breath, that means you're a little bit too close.
It depends on what they ate. You can smell it. I mean, so that can happen. So yeah, don't worry about it, man. I know how that is, because my telling why you're mad is piggybacking off of what AD said a little while ago. Kids messing with stuff. So y'all see the headphones that I got on, right? Just so you guys see that. I mean, they was $16. Got it. I understand, but I only can hear you guys out of one ear, which is annoying if you're podcasting and live streaming because you gotta hear everything.
Right.
But so my son Javante, who loves to play Fortnite, I don't know why, that's his game of the year, and he takes my headphones and plugs them into the controller, and so now for some reason he'll tie a knot in the wire. So now I got a short in my headphones because you don't know how to act. I'm mad about that, man. I paid good money for these headphones. I didn't invest in nothing to get them. I just got them, you know what I'm saying? I just got them went on Amazon and got me $16 a pair of these task cams. I'm gonna have to go back in there and buy some more.
I know.
I don't like wasting the money, bro. I like wasting the money.
$16 is $16, brother. I feel you. It's real.
Very instance. Heavy. All right, we're not gonna bring. This is not the deep conversation. Not this podcast. You should have came. We're not gonna do that.
Annoyed with it, and now moving on.
We got you. You want to ask some serious questions? You want to be deep? Wait till Derek starts talking, and then you can get it and jump all over that. That's go a long way. Yeah, conversations up go a long way. I got me some masks on order because these companies are now mandating that everybody wear a mask in public. Like Walmart, I think is one. Best Buy is going to start doing it. So it depends on where you go. That the store you walk into may say. You can't come up in here without a mask. You know what I'm saying? So yeah, he's ready. We ain't ready for Derek yet. We got this. We got this right here.
That's how I hit
you. You know, ATT. Brothers who talk. All right, welcome back, you guys. And so now we're going to introduce to you the man of the half hour. We always say that because we don't want to give half hour because hours seem to be boring and it's long and people start drifting after about 20 minutes. So we do man of the half hour. Mr. Derik Coffey who's been with us. You have our questions for Mr. Coffey. People are waiting and listening.
Yeah. But first, quick history. I've known Derik since we were in high school, way back when, about 2 or 3 years ago. Yeah. So back in the day, if just y'all don't know, before we get started, Derik was a rapper. He went and I didn't, and I forgot his name. I asked him, and Money Making Derik, MMD. Yes. And I share that. Yeah. And I share that because a transformation happened during that period. So when he started rapping, he sounded like very NWA-ish. Listen. And he used to get crowd like, oh. Then he started reading. And he started, reading W.E.B. Du Bois and a lot of Malcolm X, a lot of different things. So his mindset started changing and his rhymes started changing. And when he started, when he got his revelation, people didn't want to hear it anymore. It was like such a crazy thing. They was like, "Oh, dang!" He started rapping. I was like, "What is this?" I remember that time. I'm like, wow, it amazed me how, people get so sucked into sensational stuff, but when you're trying to drop some knowledge, some information, it just changes the game. You're just like, you lose people. So coming up to now, he's always been into money and finance, and probably since we left high school, that's been his track. And it's funny that his rap name was Money Making Derik, because now
that's hilarious.
Doing
I like that though.
So introducing Derik. So Derik, how would you explain what you do in the most layman's terms? Because he has a very technical title that I had to call him, and we had to mesh out so people could like, oh, I get it, because then he was looking like, what does he do? So in basic terms, what do you do? And then I got some other questions for you.
So I work with a firm here in Chicago. We have managed about $2 billion in AUM. It's a unique firm. It's an African-American owned firm. And we manage money for institutions, meaning, pension funds, companies, endowments, foundations, universities. And in my role, I'm what you call the investment strategist. I'm thinking big picture about what's going on in the marketplace. I'm writing and I'm communicating and speaking to clients in the very same venue as I'm speaking to you guys about what's going on. And I'm also trying to put together stories. And so that's my job. I go out, I tell the story, and I explain. And I also have some work in terms of picking some stocks too. So that's it in a nutshell.
Right. All right. So what got you into this line of work? Like, what pulled you in? What was your interest that got you into it?
It's really funny. I took a course. I was actually a political science major, right. And I read this article by this guy. I will never forget the article, Dwight Waldo, and it said, "What is political science?" And he kind of basically made it sound like it was basically a discipline created by a bunch of academics that really didn't have a place. And so my colleague and I read the article, and we're like, "Dude, we got to get another major, man. We got to figure this out. I got nowhere to go." Right. And so I focused on economics and statistics and wound up going to Georgetown studying international finance. And then from there, that's how I got to Lehman Brothers doing mergers and acquisitions. And that's kind of where it started. It really started with that article. I decided I needed a little bit more of a hard science element to a social science. Right. And combining statistics with political science and economics, combining writing with statistical analysis, right, gives me the ability to communicate to people in multiple facets of language.
Right. And if you caught that, he said Lehman Brothers, so we know a little story. Just Google it. Yeah. Derik is very passionate about it. He's had moments where he just like a little upset about that situation. So,
and just for the record, you guys, if you don't know, he's very smart.
Okay, so So my first thing I want to ask you, what has been your toughest investing decision? What has been like something that you had a tough time investing into, and kind of like why? What was your apprehension?
That's a great question. So there's a stock I looked at, and it's actually relatively recent, but I've had multiple of them. But this same scenario happens a lot. There's a company that you really believe in. You meet with the CEO, you meet with the CFO, you believe in this in the technology, and the bottom gets pulled from the company. And you've got to kind of make a decision as to whether you stick with the business, okay, or move on and take the opportunity cost to put the capital to where there's a better opportunity. And you want to stick with the business, you believe in what's happening, but the overall fundamentals of the environment are just negative. Wow. And having to sit down and tell the CFO, listen, I love what you're doing, but I think we need to exit this name, and I'm sorry, I'll come back to you eventually.
Wow.
It's hard. It's hard. And this happens in multiple facets all the time.
Okay. All right. So because when you actually see the bottom line or get an opportunity to really know what's going on, you can see that it's not the stability that you guys are looking for in a sense, or you're unsure of their direction. Is that pretty much the case?
No, that's absolutely correct. With any stock or anything you purchase, you're trying to figure out what the roadmap is. So you want to understand, how does the company make money? Right. How does the management team have a track record of delivering value to shareholders? Right. How well do they communicate? And then do they execute? Do they tell you, if they tell you they're going to get their economic margins to 10% and they're at 5%, and they only get to 8%, well, how are you going to close that 2% gap? And if I don't like what you're saying, or the environment has changed such that they can't deliver that, I need to make a rational decision and move the capital to where the best opportunities are. And sometimes that's not always a easy decision, but it's the right decision in terms of generating the right value for your shareholders, which is ultimately what we focus on.
Nice. Okay. So my second question in that, are there any stocks that's ever surprised you? Like you went in thinking one thing, like, oh, this might be a waste of time based on what I've already seen in paper. When I meet these guys, we just gonna go through the formalities, because I don't want to miss something. And you were like, wow, it surprised me, like communication and CEO and CFO. But then you looked at the papers, you're like, okay, maybe there's more to it than I thought.
Absolutely. This happens all the time. So I often invest in what you call the small capitalization segment of the market. And that's typically smaller companies, typically in the range of 1 billion to say 3 billion, but kind of you can get even smaller than that, like 500 million. And so I went out to California once and I met with the CEO and CFO for a company called Aerojet Rocketdyne. The ticker is AJRD. And the CEO was basically the same age as me. I mean, CFO was the same age as me. The CFO was not very articulate. They could not explain their business very well.
Wow.
Now, I do a plant tour and, I meet the second level of management, the people who are actually doing the work. And I'm talking to them. I see all the technology, and finally the ideas coalesce, and I understand what the business really is.
I got you.
And so I have to go back and I write my report and try to, pitch it to my team about what I think the stock is worth and where I think the real value drivers are.
Okay.
But if I would have listened to that first conversation I had with that CEO, I would have been completely like, okay, I don't know, man. But you have to look through that. You got to look at the details. And so I was willing to write this guy off the first conversation, but the actual execution was there. And that's also part of being a good investor, is listening to what's being said and what's being done and marrying the two. Because sometimes the message is not as good as the execution.
Okay.
Sometimes execution is better than the message. It goes vice versa.
So would you rather the message be not as clear in the execution, or like someone that could really talk a good game, when you start looking at the execution and it's not as clear as the message? Which one would give you more red flags?
You want a coalescence of both. I mean, I think the one you want to focus on, think about General Electric, and I don't want to single out companies, but for many, many years, General Electric was viewed as the gold standard of a company.
Right.
So you see Jack Welch leaves, then Jeff Immelt comes in, and all he does is send a very positive story to the market, and shareholders eat it up.
Right.
But then when you look through the company, say 10 years later, Jeff Immelt gets ready to leave, the execution's poor. And it's been poor for a long time. I want a guy that's going to shoot straight with me. So I think about someone like Warren Buffett. He does the annual shareholder meeting for Berkshire Hathaway.
Yeah.
And he articulates very clearly what's going on, and he tries to execute upon it. You don't always get that. You get some some good speakers, but not good executors. You got great executors that are great speakers. I want guys that can do both. But I think if you can execute and communicate your story, that's how Wall Street gets excited about your stock, and that's how you deliver value.
Nice. Okay. So in this pandemic, right, we have a lot of winners and losers. What sectors do you see? Because you get to see numbers. You're what that you're one of the experts in this. You're not just speculating so much. You actually see what's happening in the market. What sectors do you see winning and losing right now?
So it's actually a very interesting question. So the sectors that are winning right now are a lot of the stocks, and if you just look at the Wall Street Journal, you'd see that the technology sector is a sector that's actually been leading the performance through the course of most of this recovery. And consumer staples. So all the things let me explain what that is. So Zoom Technologies, obviously, this is a platform like this is very similar, where people can communicate and continue to work and engage in commerce. Things in cloud computing, those things win because it doesn't really change. Actually, the technologies enable people to communicate and get things done in a much more efficient manner rather than being face to face. Things that you always need. For example, you have to always go to the store. You always got to buy soap. You got to buy, groceries. The other area, communication services. People are looking at Netflix. People look at, Disney Plus. Those things that continue to be places that are safe havens. But actually, I would argue that if you're really a contrarian in the market, you look at that and think that there's a possible overreaction by the market negative to sectors where I think is the greatest opportunity. So let's talk about where it's been impacted the most.
Okay.
I would say the travel, leisure, consumer discretionary, retail, particularly the energy sector, and in some places in the industrial sector. And the way I think about investing is you think about which sectors are at the tip of the spear, which feel the pain most.
Right.
And then as the spear goes further in, it kind of broadens out and it starts hitting other sectors. So like the financial sector is kind of in that broadened part of the sector, but I would say travel, leisure, entertainment, things that and retail are clearly the tip of the spear. Think about a cruise ship right now. That's how that model's been under attack. So, but I do think there's still opportunity there because I think the advent of a vaccine that gets distributed widely across the people actually opens up the door and takes risk off the table. The second thing, and I don't want to go too far, but you also have the Federal Reserve and Congress engaging in a lot of policy to put a lot of stimulus into the marketplace.
Right.
And that stimulus causes a broadening out effect of potential opportunity for companies, particularly those that are most oversold. And so I think the sectors that are sold off the most actually create the opportunity because things do revert back to normality.
Okay.
He's dropping mics too. He's dropping financial nuggets this month. I hope y'all listening, man. For real. I'm trying to catch it. It's so many, the ins and outs and the politics and the X's and O's, and I'm like, ooh, okay, I'm gonna hire somebody.
Did you have a question, Terry? That anything that you want to add right now?
I know we're talking about the investment game. I know, with every investor that has been in this game for a little while, you probably have lost your shirt once or twice, maybe. Mm-hmm. What was the worst?
Wow. There was this company out of Denver that sold me on their sort of industrial process. Mm. It was a very cutting edge industrial process. They engaged in so much capital expenditure. So their free cash flow, which is what shareholders care about, the cash that they can generate to pay dividends, to buy back stock, and reinvest in the business was actually truncated. But that, was supposed to sort of inflect up, and as they didn't have to spend anymore. So next thing I know, you have a major legal issue pop up where there's an SEC cease and desist on the company. So the company starts losing money.
Of course.
They had debt they were supposed to be paying down that was going to be serviced by that free cash flow that I was expecting. That didn't happen. That debt didn't get paid.
Wow.
So they had to restructure, declare bankruptcy. It was a disaster. But that part of the reason why I mention these cases, and this is a great question, is that you have to have a portfolio that mitigates the risk. You want companies that are all operating in different industries so that you can offset the risks you're taking in particular names.
Right.
Wow.
Okay.
Speaking of taking a break, that's not even what he said. But we're going to take it right into it.
You are the segue king.
30 seconds.
What podcast can you find humor, knowledge, and everyday general conversation? That's right. It's the Brothers Who Talk podcast. Hosted by Terry the Guru and A.D. Walker. Live every Thursday at 11 o'clock a.m. Eastern Standard Time. Only on Charm City Direct TV. Go to facebook.com/Charm City Direct TV. You don't want to miss this great show.
All right, shout out to E. Digger for doing that promo for us. I always shout him out when you do that. If you have snuck in here through the back door,
yes, indeed.
I always say that. I'm gonna find a different cliche, but I like that one.
That's that John P. Key one.
That's the John P. Key one, right? If you're either here on purpose, you came through the back door, you're in here now.
Yes.
We are with the Brothers Who Talk with Terry and AD. We are talking with our man of the half hour, Derik Coffey, who's talking about investments and all of that, which I gotta tell you, Derek, I've never been the investment type of guy because I'm getting better at money. But back in the day, investing in what? I wish I could invest in Krispy Kreme. I would invest in Krispy Kreme right now. So I was never good at it. So what do you tell someone who is new in the game? what's the first couple of pieces of good advice you would give someone who's looking to invest and looking into, get into this investment stock market game?
So the first thing I think is, first of all, if you're going to invest, know who you are as an investor. So are you risk averse? Are you aggressive? What's your time frame? What are your ultimate objectives? Right. Those things are going to inform the level of risk you take and the type of investments you make. And let me just explain that. So if you are a 30-year-old person with no children and you have plenty of disposable income, meaning excess after you pay all your bills, money that you don't need, that you can put to work, you probably can take a little bit more risk if you're willing to, and this assess who you are as an investor. Do you like to race cars? Do you like to bungee jump? That's probably an aggressive investor. Whereas someone that, is a little bit more conservative, maybe they like to read books instead of going out to the club. That might be someone that needs a bit more moderate risk taking. And so knowing who you are really informs the kind of things you'd be comfortable with, because you want to be able to sleep at night.
Right.
I think the second thing, and probably more important, is really only invest that which you're able to spare. So identify the things that you need to pay for, the complete, obviously you got to pay rent, you got to pay your utilities,
right.
And then any excess there is where you would deploy that excess capital, because you would be expecting to build returns on it. And then it's actually relatively easy. You can go to Charles Schwab, you can go to Fidelity, you can go to, they even have Robinhood, which I have some perspectives on that, but I can save that for another discussion.
I wanted to hear that. I was going to suggest that. I don't know if you guys know about Robinhood, and we're going to address that too. Does simply buy low, sell high apply? We're going to address that. But Robinhood is a investment app that's kind of been pushed quite some time to beginning investors. And I really want to hear the expert opinion about why they made. It doesn't seem like you recommend Robinhood.
As an investor, what I view a robust platform with a lot of investment options is the best option for you.
Okay.
And so, not to promote Charles Schwab or Merrill Lynch or any of them, or E-Trade, but I just think those platforms offer so many more options for you to invest and build a more diversified portfolio.
Gotcha.
And that's what I don't like about Robinhood. And I also think that there's a lot more educational tools to help you know what kind of risk you're taking. I think that's critically important for any investor to know, well, why are you doing this? Right. And what can you lose? Just as much as you can get a big return, the other side of that trade is the loss. Right. And you want to sort of build a diversified portfolio that mitigates that loss. And a lot of these more formalized platforms have ways of sort of addressing and looking at your risk taking.
Right.
And I would say Robinhood, again, it's a nice way to get your feet wet for a very early step.
Gotcha.
But it's
not a long-term game. You don't feel like.
Not at all. Not at all. To me.
Yeah. Well, AD's always talking about the long game. No matter what conversation we're in, he's slide in the long game. But I guess Robinhood isn't part of the long game. You need to get you a Big Bertha. If you guys who know golf know what I just said. You guys that don't, sorry, Big Bertha. But here's a question. I got a few friends of mine who are thinking about getting into the game, but they know nothing of it. And so I think they saw an E-Trade ad, or I don't know if it was, what was the brand that had the talking baby? Was that E-Trade?
Might have been E-Trade.
Yeah.
So would you advise a first timer to do that type of trading and getting into the game that way, or are we talking? Would you advise them to maybe look for a coach or hire a broker of some sort? What would be the best advice for that?
Yeah, so there's different extremes. Let's go with the person that's extremely the novice. Let's say they are just don't invest at all and they have no understanding of it. I actually do think talking to a financial advisor is an effective way, because they're going to give you a questionnaire that's going to ascertain who you are as an investor. And then they're going to pick stocks that are going to kind of meet your overall investment objectives. They're going to assess your willingness to take risk, your ability to take risk, and your time horizon. Those three things have to coalesce to what an investment plan is. And I think those things are critically important. And the risk of going directly into E-Trade, or you might not be thinking about what your real risk parameters are. customized to what your objectives are, your ability to take risk, and your willingness.
Wow. Okay.
So you smart.
So when it comes to getting like a financial advisor, I've heard there's some that you pay to help you, and then some, I guess they do it for free, but there's a commission from what you purchase. Do you recommend more or less doing one that you pay for because you get more of a objective opinion as opposed to someone that gets paid per commission, or is it about the same? How do you feel about that?
I mean, it costs a little bit more, but I think the advisor approach makes the most sense, where you're paying your fee and the advisor does the trades. And now with a lot of these online platforms, you can do a lot of the trading for free and get the advice. So you can go to Charles Schwab, open your free brokerage account, and then go to the office and say, hey, here's my brokerage account. Tell me what you think.
Okay.
You know what I mean?
Nice.
And obviously there might be a little bit more of a charge for that extra service, but it helps you to mitigate risk. Would you rather think about this? This is where people need misinterpret risk. Would you rather spend the extra, say, $150 to get your portfolio position to generate that long-term return over a 10 to 15-year period? Or would you rather not have somebody help you and lose that same return in a flash? I actually play the longer game. It makes more sense.
There we go again with the long game.
Yeah, it's the right way to play it. And then, can I address Chris Rossetti's question? Because I actually think he's mentioning something that's pretty germane to the entire conversation. So I'm a value investor. Obviously, we operate very much in the framework of Warren Buffett. We're trying to buy high quality companies that trade at a discount to what we think is their real value in the marketplace. Gotcha. I'm trying to buy things at a margin of safety, 30% below what I think that real value is at a minimum. And what we try to do, so that is simply a buy low, sell high, but let me qualify that. Buying something that's cheap does not give you a right to a return. Buying something that's inexpensive relative to its peers, relative to its benchmark, and a company that people have underestimated its ability to deliver earnings is more valuable. And so buy low, sell high is oversimplification. It's more like buy a high quality asset that people don't understand at a cheap price.
I got you.
And when they appreciate it, the money will come and it'll be high. And you'll be selling it to the last investor.
I got you. Okay.
Wow. You got him a good lady?
That was a good one. I like that.
He dropped that thing like it was hot. Yeah, that's a hot potato. You can take that, Chris.
Hey, so I got one more question. Okay. Because I was thinking about, so when Facebook started, right? Not started, but when they went public, the number one question everybody was saying was like, they had no income generating services yet. I think they might have had boost posts maybe, but they really, everyone's like, how they gonna make money? Of course now we know how, but then, I don't know if you ever looked at it or took a look at it at that time. Did you see the potential, or did you see where they were going?
Absolutely, we did see it, and the reason why you see it is because this is the traditional story of an IPO. Is typically you're a company, you're growing faster than your revenues are coming in, and so you need external capital to fund you to grow, and so you go tap the public markets. But what's been the paradigm of late is that, and you see what Uber, you see what Facebook, you see a few others, is that they have been getting early stage money from private equity investors that effectively makes the company what you call quasi-public. Now, investors of that level of sophistication, they have already figured out what the model is, and they're actually coaching the CEOs and CFOs of these businesses on how to monetize the asset. And so Mark Zuckerberg knew well in advance that he had all these subscribers and he could monetize them, and he knew that advertising would be one of the key ways to monetize it. And so when they went public, it wasn't that the company wasn't a good company. The issue to me that I didn't buy it was that it was trading at a much more expensive level than I thought the fundamentals warranted at the time.
Wow.
It was a mid-cap company with large cap revenue.
Right. I got you. I got you.
It's grown into that.
Of course.
It's grown into that.
Of course. Okay.
And in some ways, on a price earnings ratio, it's actually relatively cheap. So it's grown into it. But again, that's the only one metric that I'm looking at it.
Yeah. I got you. That's interesting.
So, Derik, how do our followers and fans and listeners get a hold of you?
Well, I do have an Instagram. I mean, I'm kind of very minimalist on it, but I intend to be a bit more active on it with, views and opinions, and so that's one way to do it.
Yes.
So
I want to encourage you to be on more, because a lot of us are seeking this financial information. Like,
was going nuts on it.
Yeah, right. Yeah. She was ready. Everyone was ready. Listen, my wife texted me. She's like, "Can we get to him? I'm ready. I'm ready." I was like, "All right, we got to go through our banter first. It's part of our show."
Right.
It's warming you up.
The brothers. we got this. But I will ask you something, Derik, on a personal note. It's not about money and it ain't about nothing. Sure. Now, I heard you say in the beginning of the show that you're in Chicago.
I'm in Chicago.
When was the last time you've been to Portillo's? And don't play with me.
I'm going to terribly disappoint. About 3 years ago, and that's when I first got here.
Wow,
bro, that chocolate cake though.
Yeah.
Whatever. Yeah. Me and Samantha are a big Chicago fan. We just.
You not Chicago fans?
We lived there 3 rough, cold years.
Yeah, the winters suck. That's for sure.
I love the city. I really do love the city. It's great.
Oh yeah, she don't like Portillo's.
Portillo's is the greatest. What are you talking about?
Those wet sandwiches. The wet sandwich. You just can't get over the wet sandwiches.
Wet with oil.
Yeah.
I hate wet sandwiches too. But they got the best chocolate cake though. Yeah. Derik, man, we want to thank you for coming aboard and riding with us today, man. You there's some folks that was waiting. Yes. They were inboxing me like, when the guy coming on?
Yes.
Like, I mean, I can't rush them. Right. At a certain time.
Right.
But people are like, and to piggyback off AD and to echo their sentiment, people are yearning, especially now and what we're going through. Right. People are yearning to hear what's wise, how to invest, how do I survive this? I mean, you look at, I wish I owned stock in Elgato right now, because they made a killing. Right. Once the stay at home order took into place, everybody wanted to be a podcaster. Right. You know what I'm saying? So you can't find stuff nowhere now. Like the little lights I have here, can't find them nowhere. The little cam links, can't find them. I mean, and then Amazon, which I own stock in them folks right now too, they price gouging. A little cam link that's $130. They're now charging $300 for those on Amazon. So please, Portillo's is not nasty. There you go.
My wife said Portillo's is nasty. I'm just reading from my podcast so they can't read all the comments. But
not nasty.
So if you guys, I want you to follow Derik. Give him a strong follow on Instagram at DD Coffey, COFFEY. At DD Coffey, COFFEY. My YouTubers, I'm gonna put it in the link at the bottom, so make sure you give that gentleman a strong follow. He is an intelligent brother. He's been dropping nuggets since 1995, so you need to definitely follow that gentleman. He's an intelligent dude. He's very analytical, and he will
even when he was rapping.
Even when he was rapping, he was dropping jewels. He's telling the brothers how y'all are enslaved in the mind. You need to get it together.
We didn't land on Plymouth Rock. Plymouth Rock landed on us, brother.
Man, that goes so far back, man.
But you know what I'm thinking? So what I want to sum up this whole show.
Yes.
Real quick. If you find a good investment, if you're not using your money wisely and doing crazy things, I have one song for you that I want to. I wish I could play it, but I'm not gonna play it.
Yeah, don't play it. Don't play it. We get flagged. We'll get flagged.
We don't have that flag. But there's a song. If you know the words, sing along. Feel free. Self-destruction. Okay. All right, we're gonna get on out of here. You guys have a great rest of your day. We enjoyed you guys. We'll see you next week. Derik, be blessed, my brother. Stay safe up there in Chicago. I know Mayor Lightfoot is not playing no games up there with y'all. Yeah. So Y'all be safe. We love y'all. All right.
Yes.
You're gonna have
Don't leave. Stay in there, Derek. Don't leave us.
Yeah, don't leave. Yeah. All right, you guys. Peace out.
Peace out.
Thank you for watching and listening to the Brothers Who Talk. Brothers Who Talk with Terry and AD. Check us out again next week, where we bring you a steaming helping of common sense, laughs, and advice. We can be found on any podcasting platform, iTunes, Spotify, and iHeartRadio. We're also on milehighradio.com, Saturdays at 12 Eastern. See you there.
Can I be honest? Because I don't speak proper English. I am so country. My wife was always picking at me. She's always saying, "You so country, babe." You know what I'm saying? I'm like, yeah. I'm from the country, so I know what you want me to do. But I love it. Yeah. I love it, and it lets me know that whatever we want to be or set out to be, we can do it.
Right.
We got no excuses.
Right.
You know what I'm saying? Right. That here Lehman. Brothers?
Yeah, Lehman Brothers. Yeah, he was.
I started my career there.
We can play them games around here, and we color like you said.
Yeah. Oh, so one question. So I'm recording this. I want to ask you about Uber and Lyft.
Yep. Oh yeah.
This gonna be on our Patreon account where they got to pay a little bit to get this info. So what do you see, or do you see them rising up or doing? Because it seems like they're losing money. That's been the story all the time. They're losing, but investors are still dumping money into them. Because they're the only ones, and it's a great service. Mm-hmm. So how do you see them surviving, or do you see the current state of their business staying the same and making a profit?